So hi everybody, this is Also Hub. I'm Giacomo and today I'm going to analyze Oracle. This is one of the stocks that you asked me to analyze. Before we get into the video, make sure to like, subscribe and comment for the next stocks you want me to analyze. This is not financial advice, so do your own research before investing. So let's get into the content of today. I start this analysis by making a few assumptions. First of all, we make the assumptions for estimating the weighted average cost of capital. So we have to make the assumptions for the cost of equity and the cost of debt. So the cost of equity, I've taken the interest rate swap for the next 10 years that is trading around 4% more or less. So I've kept it that way. And then the risk premium that according to what's Darren this year is 4.6% for the US. And then I've taken the beta that is the last 24 months beta that is 1.21 for Oracle last time I checked. Then we estimate the cost of debt and we have I've taken a higher spread because it has a high debt to capital ratio, so I've taken that into account. And here we have the calculation for the weighted average cost of capital. I've made it so that it slightly goes down as we go forward because it's widely expected for the Federal Reserve to cut rates. So yeah. So next we have the revenue. Here's some of the highlights for the last 10 years. It hasn't done extraordinarily well, but there's a growth and it's difficult to grow once you reach the dimension that Oracle has, given that it's not a startup. Yes, it's in the technology sector, but it's already well established and well positioned. So here we have the earnings. They have grown as well, but not probably as many people would have liked. And then we have the free cash flow. And yeah, so it hasn't done extremely, it hasn't been able to deliver such a high growth. So here's the assumptions that I've made going forward. So yeah, we can make it, let's say half of that, and I've accounted for a 5% growth for the until 2027, and then a growth of around 4%, and then I've taken the long term at 3%. And then we have the terminal value and then the present value of that terminal value. Here we have the sum of all the future free cash flows at the present value and the present value of the terminal value. And then I've subtracted the net debt position, the options, and here's the valuation of those options without using the Black-Scholes model. But yeah, if we take into consideration that they're now in the money, mostly in the money options, given that this is a weighted average exercise price, probably these options will be exercised sooner rather than later. So the duration probably doesn't really represent the likelihood of them being exercised as we go forward. Probably they will be exercised a little bit sooner. So here's the value of the options, and here's the value of the restricted and performance stock units. Here's the figure, and here's the valuation that I've taken, multiplying it by the current share price. And here we come up with the Value of equity, actually I've forgot. Here's the net debt, and okay, I divided it by the outstanding shares, and we can see that by making these assumptions, as we can see, Oracle doesn't really seem to be a good fit. The calculations that we've made, given the assumptions that we have taken into consideration, would make it less valuable than what it's actually trading at. Yeah, over here, probably the market is expecting a slightly better growth compared to what I've taken into consideration. Let's see what happens. If we improve these figures, we can see that it gets closer and closer. And yeah, but I wouldn't play too much on these unless you really understand the underlying products and you think that Oracle has will probably benefit from a better growth than what it's expected from most of the Wall Street analysts, and something that can deliver better results compared to what it has done. And yeah, maybe you should take a look at the products that it makes, but as of now, I don't see something that can really be something dramatic that changes completely the trajectory of Oracle. I think that it is a really good company, well positioned, strong, well established, and so on. But I don't think that it's in a position to deliver a stunning growth all of a sudden. So this is my point. Probably not as cheap as we wanted to. Probably it would make it a hold or even a sell if you think that these assumptions are too high given what it has done in the last 10 years. Yeah, so I would wait and watch what would happen, what happens to the Oracle stock. As of now, I don't see that much value. So this is it for today. Make sure to like, subscribe, and comment with the next stocks you want me to analyze. So this is it for today. I'm Giacomo. This is Hustle Hub. See you next time.